Hey everybody, just so you know, I'm actually here on time tonight. So that's a win in my book. Hey, it's good to see everybody. And I thought it would be fun tonight to just talk about my portfolio for a few minutes and ask really three questions. Is there anything in the portfolio that I want to sell? Is there anything in the portfolio that I want to add to? Or is there anything outside the portfolio that I want to add to the portfolio? Hopefully, that will be a fun little endeavor for everybody. And I do have my Pure Leaf. Um, it's a bright light, I guess. Pure Leaf, no sugar, real brewed iced tea. So, it's good. So I don't know what you guys are sipping on tonight, but that's my beverage of choice. So, but yeah, it's really cool to actually be here on time. I'm excited about that. Um, I went through some of the beehives today. A little disappointing. There's a couple of hives that I have that, while the bees are in there and they're strong, it does not look like their queens are doing well. So I'm going to give them a few more days, see what happens. But I may be, combining some hives and that kind of thing. So that's always a little disappointing. I mean, you want all the colonies to be healthy and thriving, and sometimes they just don't. And these are two new colonies that I have. So yeah, we'll see. And I have honey supers on some of my hives. So I'm excited about that. I'm excited about getting some of that golden, delicious, sweet honey coming off of those hives. There's nothing better than getting honey from your own backyard. So anyway, I'm looking forward to that. So let's see who is on. We've got Michael is here, so it's good to see you, man. And Pat. So Pat's here all the way from Minnesota. So Michael's in Texas. Brad, I think you're in California somewhere. So isn't it crazy that we can kind of get together and be from everywhere and all be on here together? Some of you younger people may not think that's really cool, but I've kind of lived in the pre-internet world and it's just amazing what we can do together. So Billy is all the way in the Philippines. So not only just across the country, now we are worldwide. So I think there's a song about that. I'll have to look it up. I don't remember the words. Oh, it's nationwide, not worldwide. But anyway, we're worldwide. Yeah, I don't know where Shamir is. I haven't seen Shamir in quite a while on anything. Russ or Ryan or any show. So yeah, let's find him. Let's make sure he's okay. We got Rust. Hey man, what's happening? Got my buddy Russ on here. He's sipping a cup of black tea. Can you tell where honey came from? That's a great question. There are some people who swear that local honey cures allergies, and so there's some people that just swear by that. There are other people that say, like my chiropractor, for instance. I was at the chiropractor. I actually started going to the chiropractor when I was like wrestling with some of these heavy hives, and it's been really good for me because I had to go like every week for a while. And then I was like, you know what? I just need to have a consistent regimen of chiropractor and a massage. Can't leave that out. So once a month, I go to the chiropractor. And so a couple of times ago, he said, hey, somebody said that he said he had bad allergies. And so he said, somebody said local honey kind of takes care of that. And he said, I tried it. It didn't help my allergies, but I can't quit the honey. And I said, yeah, they got you started on that crack, huh? So can we tell where honey came from? The honey does, to me, have distinct taste, distinct flavors. But I wouldn't be able to tell you by tasting it where it came from. I could just tell you that it's different than what I have. So, yeah, I don't know. It's not like you can say, oh, that's Tennessee pollen or that's Illinois nectar. I don't know if I could do that. But there are some honey. I tried a honey a few months ago, and I was like, this is really awful. So they got into some flowers. It wasn't mine; it was somebody else's. But they actually traded with me. They said, "Hey, let me try a jar of yours." And so anyway, I was like, "Okay." So I brought it home and I put a spoon in there and I tasted it, and it was just god awful. I mean, it was really bad. So as a matter of fact, it's still sitting in the kitchen. I don't think I'm even going to use it. But so yeah, honey does have different flavors, but I'm not sure I could tell you where it came from. So depends on the flora. That's a new word. The flora in the area. So a little fun fact. Is it made by PepsiCo? Pure Leaf? Let me see. I think you're right. I think we've looked at this before. Yep. It is manufactured by independent producers for the Pepsi/Lipton Tea partnership. So I think it's independent guys who are doing it for this joint venture between Pepsi and Lipton. That's what they say anyway. All right. Oh, so Pat, talk to Shamir. That's great. He's been busy, but he was on Ryan's stream the other night. Yeah, I was not able to make that. I've got a busy schedule, man. And just because I'm retired doesn't mean I don't do anything. No, I'm just joking. So, yeah, or what's in it by taste. Well, I can go into a diatribe here on what's in honey, but there are probably some people who can say, yeah, that tastes like tulip poplar, or there are some people who love like sourwood honey. There's a honey called Tupelo, and it's not Tupelo, Mississippi. It is a Tupelo tree. So there's an orange blossom honey where they take the hives and they stick them in the middle of these huge orange fields, and they say you can taste that. But like where I'm at, there's not a lot of a lot of stuff. There's a lot of stuff, but it's a lot of a bunch of different stuff. So when they go out and they get their nectar, it's kind of like it's a hodgepodge of stuff. So it's a unique flavor, but I don't know if I could parse out what all is in it. Clover. There's different kinds of clover here. There's tulip poplar here, privet, blackberry. We have some muscadine vines here. It's a grape, if you're not familiar with it, that grows in the southeastern United States. And I think it really gives this honey a great flavor. So anyway, that's all I know, man. That's all I know. This is dividend investing, and we talk about honey. So that's all right. I'm good. Jim Betts is here. Good to see you, my friend. And let's see. Oh, Brad's in central Minnesota. Why did I think you were in California? I think it is. I got you confused with. I don't remember. It'll come to me, but sorry about that. Central Minnesota, Mr. Brad Durfee. Everyone, welcome, Mr. Brad Durfee from Central Minnesota. Let's see. Okay. Pat's in the Upper Peninsula of Michigan, but he spends 4 months in Florida, and that's over now. I think you're back in Michigan now, but that's not a bad combination. I mean, I would think the Upper Peninsula of Michigan in the spring, summer, fall is absolutely beautiful. I bet that's the case. And I do not blame you for deciding to not partake in those 4 months of winter. Having lived in Northeast Ohio for 21 years, that's why I moved to Alabama, was to get rid of those winters, those heavy snows. Sir Dude Bro Man, that's awesome. That's good to have you, buddy. I don't know that you've been on the program before. It's good to have you. Honey came from a bee's throat. Yes, that is true. And a bee's stomach, actually. So that is right. Can you give that honey you didn't like to your bees? That's a great question. And I think it depends on who you ask. I say yes. There's a time of the year called the dearth, and that is when, especially here in Alabama, it gets dry and dusty, and there's not a flower to be seen. The bees need something to keep them nourished, and so there's times that I have extra honey, and I feed that to them. Some would say it promotes robbing, where bees will rob your beehives. Some will say, when you attract a bunch of different insects together, you pass diseases and stuff between the bees, and that all of that may be true, but sometimes it's good for them just to get a nice sip of honey, and they're just like us. They love honey. So let's see. Oh, Mr. Income Fenders 53 has joined the party. It's good to see you, man. Yeah. So the joint venture, Pepsi's testing them out before they buy them. They're going for a test drive. Yeah. Yes, and UNH is bouncing back. It's like the rubber ball. It's up and it's down. So let's see. Yeah, Dollar General is finally paying off. That's good. Blazing FI. Who is Mr. Income? Mr. Income is Fenders 53, and he is Mr. Income. He invests in a unique way where he produces income through options and through treasuries and things like that. So he brings a unique perspective to the world of dividend investing. So I'm glad he's here. Yeah, so would have jumped in at 261. I think that's, I think you're talking about UNH, right? So let me see what it closed at. Yeah, it's 315 now. It's almost like, my buddy Russ last night was talking about the UNH, my UNH buy. It dropped. So my average cost was like in the 460s, I think, something like that. And it was up above 600. And then all of this stuff started happening. And then it dropped back to my cost basis. And I was like, oh, okay, well, whatever. I'll buy some more if it drops. And then it dropped again. And then it was down to like 412. And I'm sorry, it was down to, 312. It was down to 312. So let me see what my, yeah. So it was down to 312, and this was last week. So I bought 70 more shares, and now it's a decent percentage of the portfolio, but I bought 70 more shares, and then it dropped into the 250s, maybe 260s, something like that, and I should have bought more, right? So one of the things that I like to say is that investing is just a series of regrets. So if you buy a stock and it goes down, you regret having bought it because you could have bought it cheaper later. If you buy a stock and it goes up significantly, you regret not having bought more so that you could have made more money in that stock. And the same on the sell side. So it's really just a series of regrets. So I guess the fun part of investing is trying to manage expectations and manage the whole idea of regrets. So there you go. So it's but moral of the story, it's back now to almost 316, and we'll see where it goes from here. But with that buy at 312 last week, my average cost is 412. So I am still about 90 something dollars a share underwater on UNH, but I'm okay with that. I think it's way undervalued currently where it is. So we'll probably get to that question here in a little bit when we look at the portfolio. Let's see. First in 5 months. Good to see you back, man. It's good to get folks together on this broadcast. So that's part of what I really enjoy about this whole YouTube thing is it's certainly not the money, because there's not a lot of money to be made for small channels like mine. But what's really cool is that we are able to come together, throw ideas out, and none of us are telling each other where we need to invest. We are sharing what we're doing, and if it helps people, great, and if they want to ignore it, that's fine too. It's just a matter of sharing what we're doing. So I really appreciate you guys being here. It is really awesome. Yeah, so UNH, it says it was up. Oh, I got you. So I'm sorry, I'm talking, and Rust is saying that it's up 11% today, but according to my records here, it looks like it's up 8.2, but after hours, it must be up even more. Let me see if I can pull up the after hours. Yeah, it's up another $3 in after hours. So good work, UNH. Didn't stay down long. Yeah, so some are saying maybe it's too early, right? And that's possible. I mean, who knows? But sometimes it's better to get a little skin in the game and not regret missing out. But then if you get the little skin in the game and it continues to go down, you regret having gotten in. So there you go. Sir Dude Bro Man, glad to be on here. I'm usually on Russ's and Ryan stream. Just happened to stumble into this one. I like it. That's great, man. I appreciate that. Glad you are here. And we usually talk about dividend stuff, but we haven't gotten too far into that tonight. Russ, can you tell the ingredients of a dividend? Is that ever broken out? There is one I want to talk about tonight, and I don't know if it's really ingredients, but it is an important part of dividend investing, and I want to share that with you guys here. Let's yeah, so Russ also says hopes that DOJ investigation proves all smoke. I read that if a company is found convicted of defrauding Medicare, they can't participate in Medicare for 5 years. Yeah, we'll see what happens there, but yeah, that would be a big deal. Sure would. I haven't heard that about the 5 years, but I certainly trust what you got to say there. So I'll have to look that up. Okay, so let's flip over here to. Oh, there we go. United Health. Look at that. But let's don't go there. Let's go to this. This is my portfolio, and I'm not gonna make this bigger. But I just to share a little bit about what we're talking about here. The portfolio is almost back to 1.6 million, which is fabuloso. Looking forward to that. Year to date, we are at positive 2.32%. So here's something else I want to share with you. There we go. Let's just do that. So 2.32%, you see that in the top right. So what I do is I compare the portfolio against all of the indices, and I went back actually and did this since the beginning of the year, and I did it for a reason I want to share with you. But if you can see here, for year to date through May the 16th, portfolio is about 0.5% above the S&P 500, which would be 51 basis points if you're of that mindset. NASDAQ, we are 2.58% above NASDAQ. or 258 basis points above NASDAQ, 143 basis points above Dow Jones, and 710 basis points above the Russell 2000. So things are going well with the portfolio, but I will tell you it's not always that way. It is set up, and I shared this chart with you. I went back to the beginning of the year, and I put all of the year-to-date returns by week into my spreadsheet here, and I graphed it. And I apologize for it being so busy, but I wanted to point something out. The green line is the Wealth Circuit investing portfolio. That's my portfolio. So you can see it kind of started out the year in the middle of the pack. And once all of the craziness started and all of the drops started happening, the portfolio dropped, but it didn't drop as much as the rest of the market. So we're still actually in the lead right now, but the design and the reason I wanted to put this together like this is to show that the way my portfolio is designed is I want to try to limit volatility. So probably what we'll see is we'll see the other indices, the S&P 500 and stuff like that, maybe outperform the portfolio. But my portfolio volatility is going to be like this. Oh, sorry. Probably easier for you to see like this. So my volatility is probably going to be like this, whereas the market's volatility is going to be like this. And as a retired guy, I kind of like having lower volatility. So willing to give up some on the upside to trim off some on the downside. So hopefully that makes sense. All right, so let's go back to here. Let's talk about the portfolio. 3 questions that we have. One is, there we go. One is there anything in the portfolio that we should consider selling off? Now, I have determined, so, investing is always about learning, right? We are always learning about ourselves and about the way we approach investing. And so the goal here is to get better every time we make investments, to learn from what we didn't do well so that we can do better next time, right? That's the goal of all this. So when I think about United Health, and it got my average cost was in the 460s when I first bought it. It was up above 600, and I had it at I don't know, it was 5% of the portfolio or something like that, 4.5%, which is pretty high for me. I should have taken the time, maybe either weekly or at least on a monthly basis, to ask these 3 questions. And sometimes us buy and hold investors just kind of buy and hold. We don't really ask these questions. I think I'm going to add this little process to my process so that I can ask myself those 3 questions. Is there anything I need to either sell or trim? Is there anything I want to add to, or is there anything I want to add to the portfolio? So every time maybe I update my spreadsheet here. So you can see that, what can you see here? Let's first of all ask the question, is there anything we want to sell? For those of you who have experience with my little spreadsheet here, I have what I calculate to be an annual return potential. It tells me what I believe, not the analyst, not Wall Street, but what I believe a relative return would be for 100 stocks that I track. So if I go to the bottom of this and see all the red here, and I'm going to limit this down to the stocks that I own. So you can see that I have, well, you can't see it, but I have about 24 holdings. And my lowest expected return is 5% from Parker Hannifin. And they are 3.24% of the portfolio. Should I want to hold Parker Hannifin long term, but not at really above a 2.5% weighting, which is what I call a normal weighting. So not only do I think there's 5%, the analysts are saying 6%. They're at 136% of their fair value. They are a tremendous company, but I may consider trimming some of those shares to get back in that 2 to 2.5% range. So that's action item 1. Atmos Energy is next, and it's about 3%. I'm not going to mess with that. It is one that just continues to grow for me. I'm not concerned about it's basically a gas utility out of Texas, and I'm not concerned. I think it's just going to be a continually growing thing. You see VU is next. I'm not going to trim that. Then we have things like Visa. Now, here's one that I may consider eliminating from the portfolio, and that is WEC Energy Group. The returns are fine, but it doesn't excite me a lot, and it's only 1.7% of the portfolio. So that one I may consider eliminating from the portfolio. Because one of my other goals is to not have more than 25 investments. So right now I'm at 24. So if I peel one or two off, gives me the ability to add some other things. So from a sell perspective, I think maybe there's two that I would consider. One would be trimming Parker Hannifin a little bit. The other one would be eliminating WEC Energy. Tell me what you guys think about those. And then on the buy side, what did I do here? Oh, yeah, on the buy side, these are, is there anything in the portfolio that I want to add to? United Health still looks attractive. Russ points out there is a lot of risk there. Even Morningstar says there's a high fair value uncertainty. It is trading at about 60% of its fair value. So, there's some potential there. It's currently about 4% of the portfolio. If I were to add any, I wouldn't go above 5%. So I'm kind of where I want to be with United Health, which is why I didn't pounce on that big drop. But if it did drop again, I would consider adding a few more shares. ConocoPhillips is another one that I could add to the portfolio. I am currently waiting on that because I think there's a lot of sentiment in the market about maybe the economy slowing down with tariffs. If that's the case, then the price of gas will drop. Or if the drill baby drill works out, maybe the gas prices drop anyway, regardless of what the economy does. So I'm kind of being very, what's the word? Just cautious. I'm being cautious about the gas and oil stocks at the moment. That may not be a good thing to do. Maybe I should go in, full bore at this point. But I think we're going to see some better buy prices there. So anyway, ConocoPhillips, Google still at a great price, and I still have that as a buy. But I'm not adding anything to that because it is kind of at my limit, which is at 5%. Hess Midstream is about 3.5%, and I think that's actually kind of where I want that one. So I'm not looking to buy any more of that, although I have it rated as a buy. When I have what I would consider a full allotment of it, I'm not looking to buy anymore. Carlisle looks like a pretty decent buy at the moment, so I've got my eye on it as well. And then the perpetual Microsoft 6.35% of the portfolio. So those are the things that I would consider adding to. But at this point, there is one more. And I want to point this out. This is what I wanted to share. You see this stock called Amphenol. It is currently around 4.9% of the portfolio. And I have it as a 17% annual return potential. Analysts are saying it's going to be negative 3%. They're saying, hey, it's going to go down. And if you look at Morningstar's fair value, they're saying it's really trading at about 8% above its fair value. But fair value is it's kind of a range. So to me, 108% is really within fair value. So why would I have 4.89% in a stock that the analysts are saying is going to go down by 3%? I'm saying it's going to go up by 17. So let me show you why I say that. When I go to, where am I going to go here? I'll go here. Let's take, and this, hopefully you can see it. A picture is worth 1,000 words. And I think it's APH is the ticker. Yeah. Amphenol. So you see it's got this is Simply Safe Dividends. If you're not familiar with this, you see it's got an 87, very safe dividend rating. Although the yield is really small, it's about 0.76%. So if you're looking for higher yield stocks, this is not the one for you, but I'll show you why I like it. Credit rating is A-. It's, yeah, that's really all we care about there. Let's move down here. And if you want to know what they do, they are as this says, a global manufacturer of connectors, sensors, and cables used in electronics across a wide range of industries: automotive, aerospace, telecom, industrial equipment, medical devices. So to me, Amphenol is the Parker Hannifin of the electrical industry. So that's kind of the way I look at them. But why do I think they're going to grow? Here's why I think they're going to grow. Take a look at this. Over the last 5 years, their dividend has grown by 18%. So if you think about that, they take the dividend from last year, on average, they added 18% to that. Then they take that dividend and they added 18% to that, and 18% and 18%. This latest one was 50%. Those are some pretty high dividend growths, but that's not the only thing we look for in dividend growth investing. We also want to look at earnings, and the best way to do that, if you're looking for a quick way to figure this out, here it is. You look at the 5-year dividend growth, it's 18%. You flip down to the payout ratio, which you see here. And over the last 5 years, this payout ratio has been very consistent. So what does that mean? Dividends doing this, and here, let me do it this way. So dividend is doing, maybe I should do it like this. Dividends is doing that. The payout ratio is flat. So what does that mean? That means that the earnings of the business are growing at the same pace as what they're growing the dividend. So what does that mean? That means the business is paying for the dividend growth. That means they are growing the business, and then it's paying for the dividend. They're not robbing from the future. They're not borrowing money to pay the dividend. They are growing the business, which is therefore then growing the dividend. That's why I like Amphenol. I think it is going to do well. I think it's going to grow. So there's really 3 reasons I invest in a stock. It's either income or value or growth. And Amphenol to me is a dividend growth, a true dividend growth stock. So that's why I have it. It may not be right for everybody's portfolio, but I like the financials of the stock, and I like kind of how they're positioned in their market. So, okay. Back to here. The only other question we want to ask is, what do we not own that we might want to think about? And so I track a lot of companies. I track 100 companies. Some of them I don't like their management team. Some of them I don't like their strategy, but I still track them because everything, at least to me, everything has a price, right? So even a really mediocre company, if it's trading for half of its value, might be a worthwhile investment, if that makes sense. I don't know that I would buy it at fair value, but if it's trading at half of its fair value, maybe it's worthwhile, right? So I still track some of these companies, even though I don't necessarily want to pounce on them at the current valuation. And you can see that with Novo Nordisk and Comcast, but I do have a buy rating on Northrop Grumman. So Northrop Grumman is, I'm saying 19%. The analysts are saying 16%. I'm thinking that may have some room to run. And so Lamb Weston, I'm not interested in. Whirlpool, I'm not interested in. Realty Income, I'm not interested in. And Humana, I'm not interested in. But Pepsi is, looks pretty interesting at these prices. So those are the ones that I would consider. It would be Northrop Grumman or Pepsi that I currently don't have in the portfolio. So those are our 3 questions. Hopefully that makes sense. Let's go back to see what you guys are chatting about. Let me come back to you guys here. There we go. Let's see. What do we got here? Can't tell where I left off here. So Michael, DCAing AVUV, SCHD, and SCHY. That's good stuff, man. There's nothing wrong with that. Instant diversification, and you've got a lot of different things playing there, so that's good. Wow, Dan Weston, good to have you, my friend. Good to see you, man. Oh, Russ, by the way, I think as you were signing off last night, you said something about maybe teaming up on a live stream. I think it was next Monday night. So if you are interested in that, let's get together. Let's make it happen. Yeah. Hi, Dan. Dan. So, hey, it's good to see you, Trivin. I've always thought Hershey should buy Krispy Kreme for the cross promotion. Yeah, that's a good thought. Then they could have Hershey chocolate covered donuts. That would be awesome. That would be great. What do you think as an investor in them? I think it'd be fine. I think it does make sense. But anytime there is a purchase, that company has to pay a premium to get the other shareholders to buy into the sale. And I don't know if Hershey has the stock price to support that at the moment. So when a company, you can look back every merger announcement, whoever the acquiring company is, probably 99.9 Ivory Soap, 99.9% of the time, the acquiring company will drop in price and the acquired company will raise in price. Why is that? Because the acquiring company has to pay a premium to convince shareholders to unload their shares. So if Hershey did that with Krispy Kreme, I think it would drop the share price for Hershey. So I don't think management team is going to have much stomach for that at the moment. And if they wanted to do it with shares, I think they would want that share price to be up a little bit. Let me see what they're trading for at the moment. You would think I'd keep up with this more. $156. So, if they were more in the 190, 200 range, I would certainly, as an investor, I think I could support that. But I think at 156, they need to be focused on the supply chain for cocoa. If I were the CEO of Hershey, that would be 90% of my focus as CEO would be on fixing the supply chain for cocoa. That's what I would want to do. So hopefully that answers your question, Dan. I don't know. I kind of rambled there for a minute, but it made sense to me. So Michael, Atmos is a gas utility in a high growth area. Good choice. Hey, thanks, man. They've been good to me so far. And I've owned them for a long time. I bought them in 2021. So going on 4 years now. And they're up over that time. And I think I only bought them twice. And they're 3% of the portfolio. I had two tranches that I bought. They're up 61%. So I'll buy that every day. What will you buy instead? I've made the classic mistake of cutting or trimming the flowers to water the weeds. I've been burned selling companies at all-time highs too. Yeah, that's the challenge, right? But if I've got a process, I need to trust the process. And if the process says it is overvalued, and there are other companies who are not as overvalued. So what would I put it in? I would put it in something like Northrop Grumman or Pepsi. Sorry, let me get this stuff back together. United Health might be one. Conoco, Google. I might pick any one of those. Carlisle might actually be a good choice because I need more of that. It's only 1.3% of the portfolio. So it's kind of where I'm at, Russ. It's hard to know. Even with a process, we get burned, right? Because there's something we don't know, and the company announces some new product, and their stock price soars, and we sold it last week, right? That happens. That's part of the regret I was talking about earlier. So even when we sell it and it goes up, we have regret. So. Yeah, but I agree with you, man. You are right on in terms of cutting or trimming the flowers and watering the weeds. So if what's natural for us as investors is to say, I'm going to take the profit off the table, and there's some stocks that are really down in value, and I'm going to buy those because they're at a really cheap price. What we tend to lose sight of is that they're cheap for a reason. And so, but if something's overvalued because of sentiment or emotion, then maybe it's time to trim a little bit of that and move it into something else. So, but you make a great point, my friend. Hess is getting acquired by CVX, so I guess there's no reason to hold it. Yeah, so let me take that one as well. And welcome to the program, by the way. I'm glad you're here. Hess, there are two different companies. One is Hess Petroleum, and one is Hess Midstream. Hess Midstream are the midstream assets of Hess Petroleum that were spun off as a separate company. So CVX or Chevron will not be acquiring the Hess Midstream company. It is still going to be its own separate public company. So, but Hess Petroleum is being acquired by Chevron. So hopefully that makes sense. So don't get those confused, because if you make decisions on Hess Midstream based on them being Hess, it might cause you to make some decisions you wouldn't want to make. So anyway, just thought I'd share that. Hess looks unsafe. The dividend, actually, according to Simply Safe Dividends, I think their dividend rating is like a 40. And I've done some research on that. I really think that the rationale there is that they have one customer. And well, I can't say that. They have a few little bitty customers, but 99% of their sales go to currently Hess, soon to be Chevron. And so I think there's some consternation about that. However, when I look at the contracts, and I'm not trying to sell Hess Midstream, I'm just telling you what I have looked at and how I've gotten comfortable with that. You got to do your own due diligence. But when I look at their contracts and how they've got price protection and volume protection in for a 3-year period, and they roll that 3 years every year. So every year when they redo their contracts, they have a new 3-year look forward. And so we really have about 3 years of vision or look ahead for Hess Midstream. So I'm pretty comfortable. So I'm cognizant of the rating of 40 and that they have an unsafe according to Simply Safe Dividends, but I've gotten to the place where I'm comfortable with that. you do notice that I don't have it up at 5% either. That's right. So it's about 3.5% of the portfolio, which I think is a pretty reasonable place for that. So diversification is a way to manage risk, and so that's what I've done there. Yeah, that's right. So if I just read down a little bit further, you already figured out it's a different Hess. So yeah, good job, man. Yeah. So how so, John Jay? Hopefully, I've kind of laid that out, Michael. I don't know. There may be more to it, but that's the way I see it. Hey, Janice is here. Good to see you, my friend. Steve C has made it. It's only a weed if you don't want it. That is true. There's some weeds that make great honey, man. So there's a weed that came over. I think it was from Japan, maybe. It's called privet, and it makes some really, really nice honey. So I'm kind of glad of that, but a lot of people don't like it just because it's not native to our area. Yeah, so Pepsi's at least a good trade at 130. See where it is. PepsiCo. Let's see. Yeah, well, yeah, it's 131.79. So, I mean, if 130 is your price, then it's pretty much there. Wow, my buddy ex dividend dad is back. Long baseball night, but finally got the kids to bed. I bet you're worn out, man. You've been up for a long time, but hey, I'm glad you're on the program. It's good to have you, my friend. We miss you when you're not here, but I know you got to get in bed. You need your beauty sleep, kind of like I do. So, let's see. Triven says I like NOC, the Northrop Grumman dividend growth. Yeah, let's take a look at that real quick. NOC. I'll flip this back so you guys can see it. So their yield's about 1.75. They're to 90. And let's look at their dividend growth. How's that look? That looks pretty slick. It's 9%. Let's do our little trick with the payout ratio. See what the payout ratio is doing. Look at that. Look how flat that payout ratio is. I mean, it bumped up last 12 months, but it's overall next 12 months going to be back down to 29%. You can't ask for more than that. I mean, that's really solid. That's one of the reasons I like this company. They've got a return on invested capital of around 12%, which is pretty decent. And their interest coverage is a little low. They do have a lot of debt, so that would be something that we would want to be aware of, and make decisions about that. So, but yeah, their dividend growth is phenomenal. Amphenol has been one of my best performers. Yeah, it has really done well, man. I have been buying it this year. I think I started buying it this year. And let me see what I'm up on it. Amphenol is up about 30%. So 28.81%. So I'll take that. I'll take it every day. Do you think ETFs dividend growth better versus individual stocks? That's a great question. Because when you it's really about math, right? So when you look at dividend company or dividend ETFs like SCHD, let's take them for example, their dividend growth is pretty big, and it's because every year they restack the deck and they get different companies in there who are at a very discounted level and have a high dividend. So sometimes they grow. Is it better? I mean, it might be because they have 100 stocks in a portfolio whereas I try to be somewhere between 15 and 25. So from a risk perspective, it's lower, and maybe you're getting some more dividends as well. So I don't know. I think ETFs. So if you're not, how do I say this? If you're not as interested in individual stocks and researching companies and management teams and strategies and product lines and stuff like that, if that's not your gig, I think ETFs make a ton of sense. They give you instant diversification, and you get dividend growth. Now, well, I won't go into that. So, but yeah, I think it could make sense. I think it really depends more on your style of investing rather than where one is better than the other one. I think it really is down to style. So that's kind of the way I look at it. Extra stronger might be better. Yeah. I don't know. It's really hard to tell because they change their product mix. They change their shares, the companies that they own, and the weightings of those companies. They change those every year. So the dividend itself is based off of different foundations. So it's kind of hard for me to tell. Maybe it is growing faster. I don't know. Krispy Kreme only worth 530 million. We should get it. So Rust, I think, if you put up 529 million, I got the rest, my friend. We can do it. Wendy's is only worth 2.37 billion. Yeah, I don't own any of Wendy's. Let's see what my friend ex-dividend dad has to say. I've been able to trim my portfolio a lot this year, added to core positions, and I've done great in the downturn. Trimming strategically has helped. Yeah, that's good. That's good, man. You have done well. I've been watching your portfolio updates, and you are killing it, man. Speaking of that, if you're not a part of the Discord, you should consider joining. There's a link in the notes below, because in there, and I will share this because there is a question. Let's see. Oh, I didn't move it over. Sorry about that. Here we go. There's a little channel in here called Questions for Kevin, and the latest question that came in is from Nkiter, or NK, or however you refer to him. And he is overseas and does not get to watch live because he's actually snoozing at the moment, and hopefully he's sleeping well, and he will catch us on the replay in the morning. So is Lockheed Martin in the portfolio? Yes, it is, and it is in his. Lockheed should benefit from large deals resulting from Trump visit to the Middle East. The stock is relatively to defense sector distressed. Can you take a look? Thanks. So, let me talk a little bit about that. I don't remember off the top of my head what the lead time is for Lockheed Martin, but yeah, absolutely. I think that Lockheed Martin is going to benefit from these some of these deals that are coming out of the Middle East, and but the thing to keep in mind is that Lockheed Martin is probably 3 years out. Trying to remember what their lead time is. So if there's an order today, they're not going to see the revenue for that for probably at least 2 years, right? It's going to be a while. So, but what it does give us is it gives us that stability of income, the stability of revenue, so that they have a good, solid, continuous future pipeline of business. And so I think that's really where the value is going to come from. But I think they should benefit from that. I don't know that the stock's gonna grow dramatically. I think what we're gonna see is when the budget gets closer, I think there's going to be increased defense spending in the budget, but it's not close enough to, for the political purposes. So, but I think when we get to that point, I think we will see Lockheed Martin do pretty well. I hope, anyway. Thanks, Dividend Dad. Let me see here. He said, I'd sleep more if it made me beautiful. So would I, my friend. I would sleep 23 hours a day if it made me beautiful. Fast Daddy said he's got $10. So shaping, if you got that, I forgot how much it was, 29 million or whatever. And I got the one, and Fast Daddy's got $10. So we got this, man. So ex-dividend dad bought 160 shares of SOXQ. And yeah, that's fantastic, man. Good stuff. Yet I use SOXX, but I think SOXQ has a better expense ratio. So that's a good one. Oh, Jim. GE, RTX, and HWM benefited from the Qatar Airlines deal. Saw a bit of a pop today. Yeah, there's that's good. Let me see what because I own RTX. Out of those, I own RTX. I don't own GE or HWM. But let's see, RTX. Yeah, went up about 1%. So that's good. That's good news. So yeah, good deal. Yeah, exactly, Michael. Their backlog is a great asset. That is absolutely right. It gives investors like me a lot of comfort in investing in their future because it's pretty much locked up in terms of revenue. Yeah, Boeing, which I don't own, popped when the deal was announced, but it's down today. Yeah, that was kind of disappointing. I was hoping Lockheed would get that, but it was given to Boeing. So, that's the way the cookie crumbles, as they say. And sometimes here in the South, there's a saying, and, if you use this, it's fine. I'll take royalties for it. But it says, some days you're the bug, some days you're the windshield. And that day, with Lockheed not getting that deal, I was the bug. So it works out that way sometimes. All right. Russ says he's got the other 290. We are good to go, man. So Gendry, it's good to see you, man. I haven't seen you in a month of Sundays. Bought 100 shares of UNH at 258. That's a great price. That was awesome timing, man. Good job. So right now you're seeing probably about what would that be, $60 a share in profit on 100 shares. So you're already up $6,000 in the last week. So fantastic. Well done, man. Anyone have Foot Locker stock? I do not, but I hear they're getting bought out by who are they getting bought out? Dick's. I think Dick's is buying them. And I don't own Dick's, and I don't own Foot Locker. So, oh yeah, here it is. Rust is always there, man. Rust has the he's got everything, man. If you guys aren't listening to his live stream, I mean, he knows like thousands of companies and what they're doing and their brands, and it's incredible. Thoughts on VYMI? Let me see here really quick. VYMI. Yeah, high dividend. This is Vanguard's International High Dividend Yield ETF. I don't have any thoughts on it. I've not looked at it. I don't even know what they own. But see if I can. I mean, it looks pretty decent. They've got yield of about 4%, and they have had a growing dividend over the last 10 years, except for the pandemic year, but that is understandable. So I mean, surface, just looking on the surface, I think that looks like a fine dividend ETF to be in. I mean, if you're looking for high dividends, it's not a bad place to be. I'm going to look real quick at what it's done. Over a 5-year period, it's grown by 61% over 5 years. So what is that? 12% a year. Yeah, something like that. So it's growing 12% a year, paying 4.5% dividend. I don't think you could go wrong with that, man. It sounds like a good play to me. So Dobo Zips, it's good to see you, my friend. I don't think we've run across each other before. That's great. Yeah, I agree. I don't think it's gone through yet either. So it takes a while for Dick's and Foot Locker. Yeah, Fix. This is Comfort Systems. It's his largest holding. I think financially, I think they look great. I'm not a huge fan of the HVAC market at this point because they can get really challenged really fast with these tariffs. And I think that's why you're seeing Comfort Systems down, is a lot of components and a lot of parts and a lot of the HVAC systems come from Japan. I mean, Mitsubishi is the big maker of these, what do they call them? The ones that sit on the side of the house. I forget. I'm having a senior moment and just not remembering what they call these particular units, but a lot of it is coming from overseas. It could be wrapped up in tariffs. So, I mean, if you feel good about that, then I would, now's a great time to buy. But I think financially, the company looks great. The Boeing stock was just a little, their planes today. Yeah, there you go. Let's see here. Got just a couple of things here. What will happen to Foot Locker stock shares then? They would actually be bought by Dick's. And so I've not looked at that deal. So I don't know if it's a stock deal, a cash deal, debt deal, or all of the above. But all of those shares would be bought by Dick's. And if it's got, if it's a stock deal, then you would get so many shares of Dick's Sporting Goods. Otherwise, you would just get the cash. So that's the way it'll work. Yeah, so looking for maybe one more thing because we are at an hour and 3 minutes already. Let's see. Gendry says, sounds great, but I started with a sell put, so I take like 5,000 in losses and decided to close the put and buy the shares and sell a call against the stock for $1,000 bucks, 60 days, 320 strike. So I think that is we talked about. Oh, so that must be UNH. Yeah. So okay. So you got the shares. You closed the put, bought the shares at 258. You've got a call against the shares now at 320. So if it goes much higher than where it's at, you're probably going to lose those shares, or you can roll the call, and depends on what you want to do there. But yeah, it sounds pretty complicated, man. I love options, but for my lifestyle with the various things I like to do, it's really tough for me to be in front of a computer all the time. So said a different way, I love passive investing. Options are just a little too active for me. So even my real estate is not active, it's passive. So the Capital One merger that actually I think went through today. That I got a note. I have a Discover card. I got a note from them that said we are officially part of Capital One. So what do I think about Capital One merger? I think it is a fantastic deal for Capital One. I think it gives them access to a payment processor that is not Visa or MasterCard. And so it really helps Capital One. And so, yeah, I think it's a good deal for them. So I'm in favor of it. Not that they asked me, but I'm in favor of it. Yeah, I'm the guy with the Discover card. That's right. So, yeah, I've got a Discover card. Yeah, and maybe it's just old people that have Discover cards. I don't know, but I've got one. So, but anyway, hey guys, it has been fantastic. I've enjoyed this. Let's do it again next week. And if my buddy Russ wants to join me, he's certainly welcome. And we will take all kinds of questions, and we will just share whatever we can. And so with that, I'm going to let you off of here. And if you're not a part of the Discord, consider joining that. It's free. It doesn't cost you anything. You can jump in and play around with us in, stock market stuff. So sounds good. I will see you guys on the next one.